Good morning, traders, and welcome to the Pirate Traders live stream. My name is Charles Goff. I am an ES Futures trader who is here to guide you through the utter chaos that we are about to experience in the market this morning. All right, well, just really quickly, let's kind of run through what's been happening. There's the opening bell. Run through what's been happening so that we can figure out what might happen next. Okay, first and foremost, the market is in balance. That means it's going sideways. Why is it going sideways? Well, because it can't go straight up forever. The market goes up as far as it can, then it runs out of steam, and it needs to either have a pullback with price, which is what we call balance with price, or it needs to spend time going sideways at a higher price, which is what we call balance with time. Right now, the market is balancing with time. So that tells us that at this exact moment, the highest probability is that the market is heading back down to the balance area low. Because we looked above the balance area high and failed, it increases the odds we're heading to the balance area low. Now, it's a little early to make exact predictions as to where the balance area is. I'm calling it basically 6450 to 6400. Okay, that's the balance area. So is the current high, the all-time high, weak? Yes, it is, because we made that all-time high in the overnight. Okay, so that makes that weak. That is a target to the upside. But before we can get there, we have to convince a lot of new buyers to step in. Where is that likely to happen? Probably somewhere right here in the upper end of yesterday's range. So the market is opened. It's immediately looking for that gap fill, literally in less than a minute. Anyone who read my email this morning knows I mentioned that that was likely, that there was going to be a lot of FOMO and a lot of frustration first thing in the morning. So whatever move the market was going to do, it was going to do it right at the opening bell. And there you go, folks. They're looking for that gap fill right away. So if they can turn, well, we're pushing into it right now, 64.34 into support, that is bullish. If not, we look to test 64.30. If they turn that into support, it is bullish. They can even come all the way down. If you look at the overnight range and yesterday's range, you can see there's some tapering off here in volume and time. And then they turned what was resistance yesterday into support in the overnight. So I could pretty much say I'm bullish anywhere above that level. So any support above 64.24 intraday today is likely to turn around the market and head back up through the opening price. If we get below 64.24 intraday today, we're heading back down towards 63.99. Okay, we're heading back down towards 6,400. So whether we can find support right now at yesterday's high or around this node at 64.24, any of those would be bullish to turn around and head back up. The thing about a market that's in balance, when you're inside that balance area, the market can go up and down and all around. It can reverse over and over and over again and be very tricky. But these are the probabilities. As long as we're below the opening price, we're likely to test the previous day's high. If we find support somewhere above it and cross back through that opening price, we're likely to test the overnight high. Do with that what you will. I would say if I got in a gap and go trade this morning and I was short the market right now, I would want to move my stop below that opening price. Okay? Because if the market comes back through that opening price, it is a gap and go and increases the odds of a move higher. If they're going to get the gap fill, they want to stay below that opening price. Charles, the market is moving so fast. Yep. Lots of FOMO this morning. Lots of people frustrated that they didn't get positioned at the lows yesterday. And that causes fast moves first thing in the morning. Another thing that we are aware of is that it is the end of the month. So there's going to be some monthly options that are expiring. One thing that we want to think about is starting, tomorrow and into next week is when Vana and Charm flows enter the market. That is supportive. It doesn't necessarily mean the market is going to go up, but it does make it harder for the market to go down. So if we close today above the balance area high, if we close today above 64.50, that will be very bullish. But of course, we have 6.5 hours between now and then. We are on the public stream right now, so if you're a member of the brigade, please smash that thumbs up button. A little thumb for the pirate. I sure would appreciate it. If you're not a member of the brigade, you can still hit the thumbs up button. You can still like the stream. It's okay. We'll take it. All right, let's close out the poll for this morning. The results are 38 of you voted for a completely unhelpful poll. 40% saying the market is going to go sideways, 31% saying we're going to go up, and 28% saying we're going to go down. So you know what that means. We're going to go up, then we're going to go down, then we're going to go sideways. This market is going to be all over the place, because everyone has a different opinion about what the market's going to do, which means some of you are going long, some of you are going short, some of you are putting on iron condors. There's a lot of emotion. There's a fast tempo. These are the days we live for as traders. Rich in the house, good morning to you. Massive, welcome, welcome. Jay, it's another day in trading paradise. Hit that like button early and often. Mark is here. Trevor in the house. Tim, welcome, welcome. Abstract Grooves. Percy is here. Willie T. Sook. Will. Michael. Sniper Trader. Crypto Rider. Mo, here for show. He says he got short at 64.48. That is a beautiful place to have gotten short. As I said, you can put your stop below your entry now. And you either get the gap fill or you don't. But you can't lose money because your stop's below your entry. Very nice. I like very much. Grizzly Bull in the house. Street Salsa says, if I join the YouTube channel, are you on here every day? So to see me every day, you got to join the brigade. And that link is in the description below. It's $20 a month. We'd love to have you. John H. is here. John says the move is due to Microsoft and Meta earnings yesterday. Went Zoom to the moon. Let me guess. I'm just going to guess. Both of them said they're investing massive amounts of money in AI. Am I right? Sniper Trader says it's divided collection day for me. Or dividend collection day. Guillermo in the house. Yukaya, good morning to you. Mercutio says he took profits at 64.40. You did what? Man, you missed a chunk of that move, Mo. Missed a chunk of that move for show, Mo. Tom says, hello, nice to see a second Bookmap channel. Well, we're not really a Bookmap channel, but I do look at the Bookmap. Speaking of which, I'm on the wrong chart. There we go. Okay, so this is the moment of truth for the market. As we push into yesterday's range, one of two things is going to happen. Either we're going to bring in buyers here in the upper end of yesterday's range, in which case we will turn around and head right back up through the opening price, or we will not bring in buyers, in which case we're going to head lower down towards yesterday's lows. So seeing what happens on the gap fill, we haven't quite filled the gap yet. This is one of those reversals, a point above it to freak everybody out. But it will come back and fill it if it comes that close. So once they fill the gap, do the buyers step in? What are we watching for? We're watching for taper in volume. We want to see less and less volume. We want to see the market spend as little time as possible inside yesterday's range. We want it to just poke in, spend a minute or two, and then come right back out. If we get that taper in volume, if we spend very little time, that's a sign of support. Support is bullish for the market to continue higher. Let's see what happens. I do still think we need another poke into yesterday's range. This is the fake out. Sniper Trader says changing his vote from sideways to down, that doesn't really change the odds. Sniper Trader. But I don't know. I mean, I really think there's a good chance we bounce. Probably we spend all of about 5 minutes inside yesterday's range, and then we bounce up out of there, and then head back up through the opening price. Remember, the market is in balance. So in balance, the market going down doesn't mean it has to keep going down. It's just going down to find buyers. If there's people that wished they would have gone long yesterday, right? They woke up, they saw new all-time highs. They were like, damn it, I should have bought calls yesterday. Where are they going to start to enter trades today when we re-enter yesterday's range? So probabilities-wise, I think there's a pretty decent chance we find some support here in reverse. Now, I could be wrong, and if I start to see us spend time and bring in volume inside yesterday's range, then, of course, I will change my mind real quick. But for now, I think we will find some buyers. Let's see what happens. Gap still not quite filled. One tick left. Jay says, how long have we been buying the dip? It has not changed yet. it will at some point, but not yet. Big earnings after the bell today. Yes, I agree with the sentiment there. Every time the market tries to go down, the buyers step in. You can see it beautifully on the daily chart. I mean, if you look at this daily chart, we were talking about this yesterday. You know, when a market has all-time highs like this, where it makes a triple top, and you finally break out, you know, you come back up to it and you break through that level, you do expect some excess. You do expect the market to make a move. But you also expect, with an extremely high probability, that the market will come back down to back test that. That will be a larger correction that will happen at some point in the future. It could be a week later. It could be, you know, a year later. You don't know. But at some point in the history of the world, we will come back to test these previous all-time highs. Yesterday, the market had a chance. It could have taken that liquidation from the FOMC and turned that into momentum lower. And we could have opened with a gap down today. But that's not what happened. So for now, the market is catching a bid. It's pushing up. It has a chance to crash. The buyers step in. The momentum continues. It pushes up. It has a chance to crash. The buyers step in. Guess what comes next? The momentum continues. So in terms of intraday trading, that's not really that important to me right now. But as a swing trader, yeah, I don't think this market is done making new all-time highs. Okay, so now we're back inside yesterday's range. We are looking for support. Do the buyers step in? If they do, it will be bullish for a move back up through the opening price. So first poke into yesterday's range, very little time. DNK says, now with the passive index funds owning 50% of the equities, I think the real bear everyone is expecting is not coming till we have a huge recession, 20 to 30%, and people are out of work, or where 20 or 30% of people are out of work. As all of the peoples are putting a portion of their money, of their monthly income, into index funds. I don't disagree with you on that, but I do think it is an oversimplification. You're not allowing for black swans. You're not allowing for the unexpected. A big part of the market's moves from one day to the next has nothing to do with the number of people that own stocks. Because remember, a stock doesn't move up or down based on how many people are currently owning the stock. It moves up or down based on, in that second, in that moment, is there a buyer or seller of that stock, right? So, you know, if the ES moves up to 64.38, right? We don't need billions and billions of dollars of sellers to take the market back down. We literally just need one more short contract there than long, and the market turns around and starts going back down. Speaking of which, this is bullish. We have now found support at yesterday's high, spent very little time, and brought in very little volume. I do think we're going to come back and test it as support, but in my mind, there's a higher probability now that it will hold as support. So I am bullish intraday. So all that matters for the market to go up or down 1 point right now, or up or down $1 on an individual stock, is at that moment, at that second, is there more people that want to buy that stock or more people that want to sell that stock, right? So you can get massive price moves without it being a lot of money that pushes the market around. You know what I mean? You may have an asset like the S&P 500 that has literally trillions of dollars worth of capital invested in it, and $100 million can push it up or down, like massive amounts, like 5%. And so as a general principle, you are right that index funds basically, change the way the market moves. But that doesn't mean we can't have crazy black swan things. It doesn't mean we can't have a 3 or 4 day period of time where the market makes a fucking giant decline like this right here. We can always get that. We could get that right now. Same exact thing over the next 3 days. Now, it would need some sort of trigger, right? Something would have to happen in the world to cause panic. But the reason that can happen is because of derivatives. Because of the amount of the market which is built using these mathematical structures. And when those derivatives start to unwind, it happens very fast and you get very fast market moves. So anyway, that's just how I take what you said. Okay, so we're not getting the dip back into yesterday's range. So the next question is, can we hold the halfback as support? The halfback is the next potential support level to look for the market to head higher. The first support level found support. They bounced. This is the next one. Will they bounce? Okay, this is where I would expect to find resistance and a pullback just below the opening price. If we cross through that opening price, we get short covering. Anyone who's been short since the market opened is going to start to get squeezed if we cross through that opening price. So I would expect we're going to get a little pullback here. If not, going up. Tom says this is the end of the month, so I assume the indexes should close at the high. Your thoughts? Yes. I mean, in terms of money managers wanting their portfolios to look like they have the best possible performance at the end of the month, There's definitely some, historical proof of that in the past. But to me, the market closing right here, the market closing at, 64.47 would still be an amazing month. They wouldn't need it to get all the way to all-time highs. So we'll take it one tick at a time. Can we get through the opening price? When we do, then we worry about, can we get to the all-time high? But yes, there is definitely some validity to markets like to be at the highs at the end of the month, because that's when hedge funds have to report to their clients. Massive says, so far we have 2 all-time highs on a pre-market session. Is that a factor? Yes. So anytime a market makes an all-time high during the overnight session, so not between 9:30 a.m. and 4 p.m., that is a weak reference. That increases the odds that the market will come back to it. It doesn't necessarily have to come back that same day, but it does have a high probability that the market will come back. Okay, so passing through the opening price is bullish to see. We now have potential to start squeezing sellers that were short in the overnight and sellers that entered short, once the market opened. So we'll expect to see a little bit what we're getting now, these little pops, pop, pop, pop. That little noise you hear, that stops getting taken out. So we will expect to get a little short covering, boop, 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 boop. And then the next potential support is going to be turning this node right below the opening price into support. If they can, they keep going. If they can't, they pull back down to the halfback, 64.38. Let's see what happens. At this point, now that we have crossed through the opening price, that makes this what we call a gap and go. So they filled the gap and then they started to go. That's what we call a gap and go. That is a sign of momentum to the upside and a sign that that momentum is likely to continue for the next few hours. If the market comes back down inside yesterday's range, it means it's no longer a gap and go. It means that momentum is over. So to stay bullish from this point on for the rest of the day today, they have to stay above yesterday's high. If they come back down into yesterday's range again now, it means we need a pullback, a bigger pullback with price. Okay? So if the bulls want to stay in charge, if they want to keep this momentum going, they want to turn this area up here between 64.45 and 64.35 into support and keep that momentum going. Uzziah says, Charles, sidebar, how is the Bronco treating you? I love it. I owned Jeeps my whole life, and I love Jeeps, but I like my Bronco more. I love my Bronco so much. At this very moment, I'm wearing a Bronco t-shirt that I bought at Walmart. I don't buy clothes at Walmart, but I was in Walmart and I saw that they had a Bronco t-shirt and I bought it purely because I love my Bronco so much. Tim says, which model did you get? I got the, what is it called? Man, I'm blanking on the name right now. It's the one with the little mountain on the side, the Big Bend. So it's just a little bit above the base model, but I'm, making modifications on my own. Okay, so we're getting a lot of liquidity above price right now. I do believe they are trying to scare price back down. They're trying to get a pullback here. So far, it is not working. So far, that liquidity is acting as a magnet to pull price to it. But the fact that they just keep adding more and more and more means they are trying to scare price away. Sniper Trader says, you want a race? I live near you. I don't know if I want to race, but we could go off-roading together. I would do that. If you know any good trails. Jay says the tech sector is red from the open and weaker than ES so far. Let's take a look at the Q. What's happening with the NQ? What is it gonna do? Man, NQ still has not filled its gap. Look at that move in the overnight. Pachoo! Ain't no thing, Jelly Bane. Just a 400-point move. Yeah, so NQ, this is a gap and go. Okay? They did not fill the gap. They turned around and they started the momentum back up. So if they're going to keep this momentum going, they got to get back up through the opening price. If they start to turn, I'm pretty much like the halfback, if they start to turn 23,680 into resistance, then they need to head back down and fill the gap. But if they're able to get through that resistance, the next target is getting through the opening price. Getting through the opening price is a confirmation of the gap and go and continuation higher. But this does not look as bullish as the ES. It would have been much better if they filled the gap first and then turned around and came up. So I'd be watching literally right now for resistance and a pullback. If not, a move back up through the open. On the Q. We got 100 people hanging out, only 42 likes. If you've been enjoying the broadcast so far, please smash that thumbs up button. It is a great way to say to me, hey, Charles, I like what you're doing. Keep it up. I would love to see if we could get to like 75 likes today. We certainly have enough people. Sniper Trader says I'm in a Dodge Charger. Okay, fair enough. Fair enough. Then I don't want to race. Thank you, Tom. Appreciate you. Design Knob in the house. What's up, Design Knob? He says, do you see any deer? Yeah, those deer, they were out last night in the NQ. They had machine guns on their head and little T-Rex arms. Jay says, I got to sing more to get more likes. You got to sing for your supper. I'm so lonely, so lonely. I only got 56 likes. Frito said years ago I had a deer leap over my car in Wisconsin. I thought it was coming right through my windshield. It got very lucky that it made it over your car then. I guess you both did. know. Sorry, DK. I'm sorry. Okay, so the market's running out of steam here at the opening price. We know what's going on. We can see that they've got so much liquidity above the market that it is scaring price away. This is just one of those things that can happen. It seems counterintuitive. You would think if there's a bunch of liquidity above, price should want to go fill that liquidity. But a lot of times traders are afraid to go long because they think, look how many sellers there are above. And by traders, I mean computers. Are like, there's so much selling above, we don't want to go long into that. So it stops the buying. And you can see that that's what's happening here, right? So as the market was coming up right here, what were they doing? Adding more liquidity in those nodes. Started to come down, came up again, more liquidity. Came up again, more liquidity, getting darker and darker. And so price isn't going to be able to get up through there until they start to disappear this liquidity. So we're looking for a pullback into support. We got one here around 43, 64, 43. We could look for a bounce there. If not, this one back down here around 63.37. We could look for a bounce there. And what we want to see in correlation with a bounce in price is we want to see this start to disappear. We want to see the colors fade away up here. If that happens, price can turn around and head back up through it. Okay, no support at 42. So now we're looking at this node around 38. Buyers really got to hold that if they're going to keep this momentum going. And wouldn't you know, what is starting to fade away? What is starting to disappear here? That liquidity. So they're going to let it find support and turn around and come back up. Crypto Rider says, look at those small stairs on Bookmap, how they rise with price. Seems like someone is long and moving their stops up. It could be. That person wasn't long very much. They only got squeezed for like 17 contracts on that dip. It don't take much to squeeze that long trader. One little dip took out his trailing stop. David Cooper says, how do the computers know it's sell orders and not confirmation buy orders? What's a confirmation buy order? So if you're looking at liquidity in the order book, any liquidity that is above price is sell orders. If somebody wanted to put, for example, a stop buy order, so let's say somebody was like, if the market comes back through the A period high, I want to get long. So I'll put a stop buy order in there so that as it crosses through, I go long. That would not show up in the order book. Okay? It wouldn't, because the stop order is held by the broker until the moment the market gets to that price. So the only orders you can see in the order book above price are shorts, are sell orders. The only orders you can see below price are long orders, limit long orders. Now, if you're asking whether or not those are new shorts entering the market or a buyer, taking profits there, that we don't know. But it's the same thing functionally to the market. If there's limit orders up here, whether they are somebody that went long below taking profits on their longs, or they are somebody who wants to get short there, that's like the resistance level they want to short, it has the exact same effect on the market, which is it stops price from being able to keep going. So what the bots are doing is, these are the high frequency, like day trading bots. They're constantly calculating where is the liquidity in the order books. First off, how much is it? What is the imbalance between liquidity above and below price? And how far away are those orders? The other thing that they're paying attention to is, are those orders changing or are they staying the same? Right? So the longer orders just sit in the order books, the more likely they are to be an actual human entering a trade there. The quicker they're in and out, in and out, in and out, the more likely they are to be bots. And so the high frequency computers, they know the difference between all of this. And so sometimes when you get a big node of liquidity, it becomes a magnet and the market works its way up to that node of liquidity because the high frequency bots know that's a real seller that wants to get short there. And so they'll go long knowing that's the liquidity they can exit on. Or if they think, it's going to be a spoof or something like that. I don't really know. I don't work at a high frequency firm, but sometimes they are afraid. And so the market goes the opposite direction. So all we can do as traders, when we start to see these big nodes of liquidity pop up, is ask ourselves, what does price do as that liquidity pops up, right? And so if I see the price is going up and they're adding more and more liquidity, and then price turns around and comes down, and then it tries to go up and they're adding even more liquidity, and then it goes down, and it tries to go up and they're adding even more liquidity, and it starts to go down, what I'm waiting to see is, when do they start to pull that liquidity? Because as soon as they start to pull it, price will start going back up. And if I zoom in here, you can see that happening in real time. It's lighter in terms of its color. Let me switch the color of my pen. It's lighter in terms of its color. It starts to get darker. What does price do? It pushes away. Starts to get lighter again. What does price do? It starts to come back up. Starts to get darker again. What does price do? It starts to go down. Price takes out some stops. It liquidates. What does it do? It disappears, right? They start to really pull those contracts. What does price do? It turns around and starts heading back up. So the changes that you're seeing in the liquidity up here, that's high frequency bots. The changes in price that you're seeing here, that's high frequency bots. And to be totally honest with you, we often don't know what they're doing or why they're doing it, but we can observe it happening, recognize what's happening, and then assume whatever is happening is going to keep happening. As long as they keep adding more liquidity, price is going to poke back down. As long as they keep pulling it, it's going to turn around and come back up until one of the two disappears, until either they completely remove this liquidity or price can get to it and fill it. Or, it probably gets spoofed before it gets filled, but you know what I mean. Try to fill it. These are the games they play all day, every day. I talk about this stuff in my Mastery of Markets and Minds workshop. I got one scheduled for September. If anyone here wants to learn more about the mechanics of a market, how it works, why it does what it does, and what we can look for in the charts to give us insights to understand what it's doing, as well as, how to manage risk, how to develop trade setups, what are my personal trade setups, all of that and more is covered in detail in my Mastery of Markets and Minds workshop. So if you are interested in that, there is a link in the description. It's just marketsandmind.com. And you head down there and you sign up, and we'd love to have you. marketsandmind.com. You scroll on down, and you just click that sign me up button, and you're in, baby. If you sign up now, there's an early bird special where it's a little bit cheaper. So you can sign up now and, save some money. And then if you change your mind, you can change your mind up until 2 days before the workshop starts, and I'll give you your money back. Just email me and say, I changed my mind. I want my money back, and I'll send it to you. The reason I have to, stop that 2 days before the workshop is because the day before I send out the links to join the video. So if you ask for a refund then, you can still get access. So I got to stop the refunds 2 days before. But if you want to get in now to save some money on that early bird special, you can always change your mind in the future. If you're weary and you're like, I don't know, Charles, that's a lot of money. Spending $400 to learn how to do a skill that I can make thousands of dollars a day doing, that's crazy. Well, then you might consider joining the brigade. Also a link for that in the description. So that is just piratrators.io/join. That is only $20 a month. And then you get to hang out and watch these live streams every day, hear my opinions, see that the things I discuss do work consistently in every market all the time. Now, does that mean I'm always right? Of course not. I'm wrong all the time. But the system works. I might be flawed in my reading of it sometimes, but the system works. And so if you're interested in learning that, marketsinmind.com. Okay, so we are coming back for this support here around 63.37. To me, this is a really important level. For one thing, I have a feeling the NQ is heading back for the gap fill. Yeah, so NQ is heading back for 23.589. So if the ES wants to keep this momentum going, they got to hold this support around 37. Because any buyers who've been going long in here, they're going to start to get squeezed if we pass lower. And then the momentum will be over. So the bounce is now or never for these bulls. Right here. Right now. Right here. Right now. Bow now, 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 now. David says, at what point do you think that bots will start ignoring humans and our behaviors and just start competing against each other? I would say we're already at that point. So, yeah, again, I'm not like an expert on these high frequency firms. I've read a few books about them. I have a vague understanding, but I'm not like, in that world where I understand it in depth. But from what I understand now, it is mostly bots against bots. Now, they know where regular traders, whether it's retail or institutional, they know what levels regular traders are looking at, right? They know where the support and resistance is. They know where the trend lines are. They know where the moving averages are. They know where the VWAP is. They know all of these things. And they do still take trades to squeeze those traders at those points, right? That is still part of the programming that they go through. We are liquidity for them, and they will absolutely take it. But they are also competing against each other. And so this is what happens is like somebody's working at a high frequency firm and the firm is doing really, really well. And then somebody comes along and says to them, listen, I will hire you to come work for me. And you basically build a bot to squeeze that other bot. So then that person will stop working for the company they've been working for. They'll go work for the competition. They will then write algorithms because they know how the algorithms work for the first firm they worked for. They will then write algorithms for the new firm specifically to squeeze the bots of the previous firm. I mean, it's like the Wild West out there in bots versus bots. And of course, we don't know any of this. It's all happening behind the scenes. But yes, they are now in competition with each other. And it makes for reading the chart much more difficult. It makes for a lot more randomness intraday because it's not humans making decisions. If humans were the momentum up right now, we'd be up at the all-time highs at this moment, right? Because what would have happened? Some people would have bought the dip. Some people would have chased. None of them would have taken profits until we got to the all-time high. And so we would have just kept going and going and going. But then these high frequency bots step in and they start playing their games, and we spend 2 hours going fucking sideways for some random reason. And then we go to the all-time high, right? It's like, or we go sideways for 2 hours, we poke down, reverse, and go back up to the all-time high. And it's just like these really weird behaviors. We see it every day. TF says, I took the mastery course and it's awesome. Highly recommend it. But Jeeps are better than Broncos. All I will say is, have you owned a Bronco? It is a much more comfortable drive. It has all the capacity of the Jeep. A Bronco can go anywhere a Jeep can go. Obviously, depending on the different models and stuff like that. But like the full model of the Bronco can go anywhere that, like, you know, a Rubicon can, but they're way more comfortable. They're just a way more comfortable drive. Mark says he took the course too. Best he's ever taken. Thank you, sir. Truman says, speaking of bots, I forgot that Meta is the most manipulated bot-driven stock there is. I knew there was a reason I stopped buying it. Yeah, all the big name tech stocks, you know, all the Mag 7, they all have an insane amount of bots of their own going on. Okay. Dun dun. Dun dun. This is the moment. If the buyers cannot hold this node of support right here, we're going to head back down into yesterday's range. So we want to see these ticks pop back up above the 0 line as a sign of buyers stepping in here. If they don't, boop, 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 we start to head lower. Can they hold it? TF says I'm a Jeep lifer. I can't cheat. Fair enough. Jay says Ford confirmed during its earning call that the recall of vehicles because of a potential fuel leak will cost them $570 million. Yeah, I did get that notification about the recall. There's 2 of them. There's a recall on one of the gauges is off, and then the fuel injector as well. But it happens. I mean, you just take it into the dealership. They swap it out for you. It's not the end of the world. So if this support is going to hold, they should start to disappear, this liquidity. It should start to fade out. less and less. Okay, so we are still inside the initial balance, but as far as I'm concerned, I now see this the same way I would see a trend, which basically means as long as the C period low stays above the B period low, the market is likely to keep going up. If the C period comes down and it gets a full point below the B period low, that is the end of the momentum, and we're likely to get a pullback into yesterday's range. So the buyers have found the support. Now they need to reverse with price. They need to start to squeeze the sellers. Otherwise, this thing will flush. Some stops just got taken out. Frito says, it's so nice to be in a trade and my platform can't connect. Boy, that's terrifying. Mark Hughes says, good morning, everyone. Yes, I second that the Mastery of Markets and Minds workshop is the best class I've ever taken, hands down. Thank you, sir. Appreciate you. Okay, no, I sound like a broken record, but here we go again. Same price, same behavior, right here, right now. The buyers have got to hold it, or this market pulls back down into yesterday's range. Dun 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 dun. There it is. All right. So that to me means the gap and go momentum is over. So what does that mean when I say the gap and go momentum is over? A gap and go, which is when the market fills a gap, then turns around and starts going in the direction of the gap. That is a very specific type of behavior. It is caused by chasing of price. Shorts, in this case, if it's a gap up, shorts get squeezed, FOMO buyers chase, shorts get squeezed, FOMO buyers chase, and it just keeps going and going and going as far as it's going to go until you get to a level where people take profits and the thing runs out of steam. The fact that we got the gap and go, we got above the opening price and then instantly ran out of steam right there, tapered off with volume, is a sign that that gap and go momentum only lasted to get us back to 64.50. Well, why is that relevant? Why do we care? Well, because before the opening bell rang this morning, we drew this as a balance area. We looked at the amount of time and volume in this area the last time we made all-time highs. We looked at the amount of time and volume in this area, last night. And we said, this is the balance area high. So if the market wants to keep going up, it's got to get above there and it's got to stay above there. Well, today we just tried to get above there and we couldn't. So that increases the odds that we are still in balance. Okay. If we are still in balance, the highest probability is that we're heading for the balance area low. Now that doesn't mean today. It just means in the days ahead that we're likely heading back down to 6,400. Okay, so what are we doing intraday? Well, I would describe myself as neutral, neither bullish nor bearish, basically in between the opening price and yesterday's high. This is an area where those day trading bots that we've been talking about can just play games for hours and can just keep reversing the market, making it look like it's going to go down, making it look like it's going to go up, and they can play a lot of games. Okay, so in between yesterday's high and today's opening price is sort of a no-go zone for me, where I don't want to be looking for trades. I don't want to be forcing trades. I don't want to be driving myself crazy trying to understand, is it going to go up? Is it going to go down? Is this going to happen? Is that? Because then I start to burn up my mental capital. If there is going to be a larger move in the market today, that is either going to happen when price gets back above the opening price, in which case you will squeeze the sellers that are going short right now, or it's going to be when we re-enter yesterday's range and you squeeze all the buyers from so far today. Okay. So the bigger move will happen above the opening price or back inside yesterday's range. If you made me vote right now, you put a gun to my head and you said, Charles, even though you don't want to decide right now, you want to wait for more information, which way do you think it's going to go? I would say I think it's going to go lower because we got the gap and go, but didn't get any follow through. That is less bullish to see. And the fact that this is now a look above and fail of a balance area high is bearish to see. So less bullish plus bearish equals higher probability we're heading down to 6,400. Again, not necessarily today, but in the days ahead. So if you made me choose, I'd be a bear right now, but I would not enter a short right now because I think we could chop sideways between yesterday's high and the opening price for hours before the market makes whichever break it's going to make. With that, I'm going to call it quits on this live stream. Thank you guys so much for joining me. I really, really appreciate it. If you are not a member of the brigade and you enjoyed this live stream, you might consider joining. It's only $20 a month, and I give these insights every single day. If you are a member of the brigade, I'll see you tomorrow morning. For now, head on over to the Discord, hang out there, share your insights, share your opinions, share funny memes, and stop shit-talking Broncos, okay? All right, guys. Have a great rest of your day, and we'll see you next time.